Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 30th of October. All right, now, as we come into the main day for data, right? This is the main day where we can get some general direction on the currency pairs. The overall analysis, it's pretty empty, right? And it doesn't, it's not surprising, I was going to say, because ahead of a couple of major central banks, especially the FOMC, it's very common for the currencies to pull back to within their recent ranges and get ready to reload, basically. So market conditions today, normal liquidity. I think we're in the calm before the storm. Now, obviously, the same geopolitical events are impacting the market, but they'll be pushed aside today as we have, we've got the Bank of Canada and the main bank that runs the whole global setup is the Federal Reserve, right? So this is where, when you're as a trader, you start to get excited because there's potential in the current numbers. Now, to me, as I look at the market and the general analysis, and I'll come to the charts in a minute, the fact that there's no overriding trends at the moment, okay, that tells me the trading opportunities right now are probably short term, within the day or over just a day, if that, even hours, depending on what the data is. So you've got to follow the data for where the momentum is going to come from. First of all, in the Asian session, we're going to have the Aussie CPI. Now, unlike all the other economies, this CPI data is quarterly. It has a much bigger impact. All right, so make sure you check that out. Now, the Aussie, it's just sitting in limbo, but, once again, short-term trading opportunity. We may get 50, 60, 70 points. You have to wait and see what the variance is. Coming to the European session, the German unemployment change. This is a bit of a stretch. I mean, everything in the German economy is very important to the Eurozone. Unemployment, well, the German economy is so consistent. That's why any variance here in unemployment would be a significant thing and impact the Euro. So just keep an eye on that. Generally speaking, there is generally not a lot of variance there. And then as we lead into the early North American session, we've got the ADP non-farm employment change, another stat there on the market. And then we also have the advanced GDP numbers, right? So they're a bit of a lead in, but I don't think the market's going to get too excited about those data releases, as we do have the Bank of Canada coming up first with their interest rate decision. And then we've got the press conference afterwards. Now, with no change in interest rates, the general rate change obviously isn't a factor. The statement will be important, and also the press conference. When there's no change expected in the rates, I generally think it's a convoluted event and probably to be avoided. Watch it, see what happens to the CAD and see what the Bank of Canada have got to say. But to me, that's not the main show here. It is all down to the Federal Reserve. Now, they are expected to cut by 0.25. I think once again, we're going to see a 0.25 cut. They come back and say, that's it for now. And we may see the US dollar rally. Right, the rate cut is factored in. So unless they come out bearish on top in their statement and also in the press conference, to me, this is once again another one-off cut. Wait and see, and that could be it for now. So we may see a bit of a knee-jerk down on the dollar, and then we may see it bounce. I think the overriding thing is you've got to understand this event is so big and can give all the major currency pairs direction. The trading events that are following the next 2 days will become a lot easier if we do get direction from the Fed. All right, that's the way you've got to be looking at it. So don't think these big events are the be all and end all. They can be quite difficult to navigate, especially when liquidity disappears at the time of the releases. Now, the major pairs, check this out there. So Aussie back in the range. Well, there's no real sort of downside here in Kiwi, but it's just now trading sideways. Dollar yen, I've shrunk in a bit more data. It's slowly up, but only just, if anything, sideways with a bit of an upward direction. Euro sideways, sterling sideways. And we've had a bit of a stop loss run to the top side here, a bit of a short squeeze in dollar CAD. And it's not surprising ahead of the Bank of Canada, right? So we could see that this sort of short-term downtrend was waning. It was starting to drift sideways. So a little blip to the top side's no major drama. It gives us a chance to get in at better levels if the Bank of Canada comes out very hawkish. All right, so there's your charts, right? We've got everything where we need them. Now, obviously the major events, the Aussie CPI, you're looking at the Aussie dollar and the Aussie crosses. You come to the Bank of Canada, we're looking directly at dollar CAD and the Canadian crosses. And then when it comes to the Fed, you're looking for the pairs with the best technical setups. Now, dollar yen, it's still a little bit caught up in the whole safe haven trade, but it should come into play. Euro, definitely. Sterling, you know what? I'm leaving that out because the UK have got a vote coming out on December the 12th. We'll have to play it from here. But the pairs to focus on for the Fed are the ones with the best technical setup. So Euro, I mean, I'm gagging to sell this thing, but it's just not primed yet. And coming back to the Euro, I mean, I should, there'd be a bit of miss of me not to include the ECB, okay, in a bearish sentiment. These central banks, the ECB, the RBA, and the RBNZ, are the banks that are talking about cutting rates or doing more easing if things go a little bit more pear-shaped, right? So, you know what? The bias from these pairs is down. The key focus today, what we want to get out is I want to see what the Fed bias is. What's their statement? What's their forward guidance on interest rates? That's the most important thing. And we're also going to get that from the Bank of Canada as well. So those two big questions, we will get answers today. Obviously, anything to do with the US dollar impacts all these other pairs, and that's why the Fed meeting is so important. All right. But for traders in the Asian session, if you have got time, check out the Aussie CPI today. That could be a short-term trade. Obviously, I wouldn't be running that trade into the US data and into the Fed meeting. So we'll have a good 12 hours before we need to sort of square that up. But we're looking for some significant variance there. And that's pretty much it, guys. It's as I said, it's the calm before the storm. This is where we're waiting for. The federal meeting, the FOMC meeting, I should say, resets the US dollar sentiment for the next 4 to 6 weeks. Right? That's why this is so important. And hopefully we get something because it will light up our analysis if we can get clear direction from the Fed. The fact that we do have these outstanding geopolitical events, that's what's been keeping the Fed on hold. And if anything, pushing interest rates down in the US, particularly that China-US trade situation. And when you look at the news, I mean, there's not much happening, but what we're getting is, when you're looking at the potential Chinese side of things, the US officials are saying, well, maybe we're not ready to sign a deal yet. I'm not surprised. You've got that UK election on the 12th, and then then you'll find sort of opinion columns about what the dollar's doing and the Canadian dollar ahead of the central bank meeting. So, you know what? We're waiting to hear from the central banks, and that's where the direction comes from. That's where trading opportunities stem from. Right? That's why today is so important. So make sure you check those out. But don't forget, after this event, we should have very clear direction here, hopefully, from the Federal Reserve, one way or the other. So everything below here becomes a very active trading opportunity. So don't sit there and think, I've got to nail this one. It's often best to watch it, see what the direction is, and then nail it with the opportunities following this. That's what I'll be looking for. All right, guys, have a good trade day. All the very best. Cheerio.